Hey, Anthony.
Hello, Claudine.
Today we're talking about federal tax amnesty for 2016.
That's right.
But there really isn't federal tax amnesty.
Yeah, that's one of those things, man. People keep searching for this term, and it's what they call our office to say, I'm interested in a federal tax amnesty program. And there really isn't such a thing. And I think where the confusion comes from states, because state revenue agencies are usually always running some sort of tax amnesty program.
Yes.
And it makes sense when you think about what they're doing. If you look at, I've looked at a lot of the bills the states put in. The legislatures get together to say, we need to have a tax amnesty to raise revenue and give people a fresh start, a clean, fresh start. And so they all talk about, it's like, yep, this is going to increase our revenue if we do this tax amnesty. We've had people who haven't paid taxes in a long time. If they, usually the tax amnesty is like, it doesn't matter what your ability to pay is, right? As long as you pay this amount by this date, they won't prosecute you criminally, and they're going to give you a break on your taxes. It has nothing to do with your ability to pay. If you could afford to pay the whole thing, you don't have to. And that's kind of how those tax amnesty works. All right, and they're one-time thing, because you can't run a tax amnesty every year.
Yeah, every January.
January.
I'll just wait and
just wait.
Not pay.
I'll wait till I'll wait for the amnesty in 20 years, and then I'll come clean. So you only can do it every so often. You can't do it every year. Usually you'll see, some of them will have different types of amnesty, but around 10 years or so, they kind of like, oh yeah, the amnesty thing. Let's do that. So those are sort of how the state tax amnesty works. We just had an Indiana one that wrapped up. And then there was another one that was going on too. I think maybe Louisiana. So I don't know which states are going to do it in 2016. I'm sure that there are some. So people think about that, the federal tax amnesty in the same way. Well, here's the difference. Okay, if you want to get a break on your federal taxes, okay, it's not that, hey, will they give me a break if I pay it all in full? No, because here's the thing: they don't need your money. First of all, so you don't have the leverage you think you do. Well, I'll pay them in full. Then hey, I'm waving this cash at them, they'll say, oh yeah, we better take it. They don't need your stinking money. So and here's the reason why: federal government has all the money in the world, all the money it possibly needs. They do not suffer. They have their own printing press. Right now, the United States government is $18 trillion in debt. And nobody's really all that concerned. Nobody, all these people, the only people who are concerned are the people who aren't in Washington. The people in Washington who apparently say, guys, you're going to run out of money. You're going to run out of money. Aren't you worried?
No.
Man, it's just like, no, because I think they know. Like, no, because we'll just make more. And we know that people are going to accept it because they just do. So that's sort of what it is. Like, we don't really need your money. The IRS... in 2016, in fiscal year 2016, the federal expenditures are going to be $4 trillion.
Okay.
The IRS is going to bring in $3.5 trillion, which is a record. $3.5 trillion is a record. So, but you're still $500 billion short. And it's something like that's about 15% short. Nobody cares.
No.
It's not an issue because, again, hey, we have as much money as we want. We have our own printing press, and that's the way it is. So trying to go to the IRS to say, hey, look, I'll pay you in full isn't going to work.
It's a drop in the bucket.
Right.
Not even a drop.
Yeah, they don't care. They don't care. Where you do get a deal is when your ability to pay is lower. That's where you do get a deal. And there's two reasons why. Two main reasons why. Maybe somebody else would have a different opinion. Two reasons why the IRS will accept less than what's owed. Okay, and it's usually you don't have the ability to pay. Okay, and the IRS has a limited amount of time to collect on a debt.
Yes,
and that's limited by Congress. If the IRS, there's just a law that says 10 years from the date of assessment. Now, there's things that can stop that from running. So they're looking, it's like, okay, we got 10 years to collect this monstrous debt from someone. Well, and they know it's like, well, you can't get blood from a stone. You really can't. So it doesn't matter. So it's, it doesn't matter how much they're going to say somebody owes. What are they going to get out of them in 10 years?
Right. It's better to get something than nothing.
Right. So like, well, the person says, hey, I'll borrow money from my parents to pay you this much. Will you take that? Okay, yeah, we'll take that because we know, it's gonna cost us, being in the collections part of the IRS, that's costing them money. Enforced collections cost them a ton of money to do. Yeah. By far, most of the revenue comes from people voluntarily sending payments. If they had to actually go and forcefully collect everything, they would get a fraction, and their costs would be just, humongous. IRS only has 89,000 employees, because most people send the money in.
Yeah.
So if the IRS had to collect, had to be the world's largest collection agency, which I don't think they are. I actually don't even think they are. I'd have to look into that because just so many people voluntarily pay.
Right. And now the number two reason.
Mm-hmm. Number two reason.
The
number two reason is there would be a rebellion.
Mm-hmm.
I mean, you would talk about pitchforks. There would be so many people. At some point there reaches a critical mass of people. The IRS is pretty good, and Congress is pretty good at knowing what the right amount of people is to audit each year.
Mm-hmm.
Okay, because if everybody was audited each year, that's it. IRS is done.
Yeah. They
would say this is absolutely ridiculous, but you only pick on a few people who are complaining, and people are like, just pay your taxes, right? And that's the thing. And then most people, and then it's also pretty ingenious how it's really only a few people who are paying taxes each year. What people don't realize is that it's going to be your turn.
Eventually.
You might be younger and say, yeah, just the rich people are paying taxes. Then one day you're looking at me like, you're the rich person. You're like, what? No, I'm not. Wait. Oh, man.
Yep.
It's like, well, now cry me a river. All these years you thought it was a good idea. Now you're one of them. Now you have a problem with it. But you're not enough of a majority. And so, if you pick on the minority to the right amount, you can get away with it indefinitely.
Without the rebellion.
Right. So, but if if these debts didn't go away, if they didn't settle it, that's it. There's pitchforks. You guys are, tar and feathers were a thing. Mm-hmm. And I think it hurts. I don't know how you get that off exactly.
I don't know.
Turpentine, kerosene.
Mr. Clean Sponge.
Mr. Clean, yeah.
The magic eraser.
That'd be something. I got tarred and feathered. Jeez.
Yeah. Yeah, so it does. It makes the politicians look like they're good guys.
Right.
Helping out hardworking Americans.
And it cost the politicians zero. We're going to give those hardworking people breaks on their taxes. Okay, what did you give up? You gave up nothing. Mm-hmm. You're just basically saying, hey, I have job security because, look, I'm one of the good guys.
Yeah, look at me.
One of the good guys. Right. So it's always, that's why, you give someone this inflated, stupid bill, like, we're going to give you a break on it. Wow. So it's kind of a little shell game. It's like, what if you didn't beat people up in the first place, that they required this hospital visit that you're kind of giving them for free, well, then there's no reason, what's the politician's purpose at that point? Mm-hmm. So they need to have a purpose. And this, they create they partially take away the pain that they cause, and that's their purpose, and that's sort of what it is. And so it's a very devious strategy. Because it works, right?
Okay, so even though there's technically no federal tax amnesty, if we're talking about federal tax amnesty, number one rule is get into compliance.
Right.
Most important.
Yeah, that's always it. It's like people call all the time. They're saying, "Oh yeah, I want to get a deal." What are you doing now? Well, are you making your current payments? Are you adding to the problem? Oh yeah. All right. When you file this year's tax return, are you going to owe money? Oh, you bet. All right. There's our problem. We really don't want to start. You have to be in current compliance. You have to be stopping the problem. You have to make every current tax problem an old tax problem. So compliance, and I think a few of our fans have said this, the compliance, and they've really gotten that, and that's been helping them out a lot.
Oh, good.
They've been saying, we've been getting a lot of feedback that getting into compliance is the sort of most obvious hidden advice.
Yeah, and you know what? It's got to be a good thing because trying to deal with these problems is so overwhelming and scary. And to actually take that first step, it's almost like a breath of relief. Like, okay, now what? That's a good, yeah.
Yeah, and you're breaking the cycle.
Yes.
Current compliance breaks the cycle. Now you can look at it a totally different way.
You can step outside of it and go,
right,
okay.
Because now your problem's in the past. Mm-hmm. So now you can actually do something with it once it's in the past. Yep.
Okay, so IRS amnesty for unfiled tax returns.
That's right. Okay, so let's talk about unfiled tax returns. Now, see, if you don't file, and there's a lot of people don't file. If you're, a lot of people are self-employed. Some people are self-employed. They don't file taxes. Now, the IRS may do one or two things. Nothing. If they don't get any 1099s or W-2s on you, they don't know anything about it, so they don't do anything about it. Or they may file returns for you. Okay, and if they file returns for you, the substitute for return, SFR, it's not going to be a real helpful amount. It's going to be more than probably what you owe. Mm-hmm. And that's sort of them saying, we'd really like you to file. So in either of those cases, you're usually, if you're unfiled, there's no SFR, the IRS policy is to go back 6 years. Okay, even though the IRS has forever to assess the taxes, you sort of have according to the law, you would have to go back to all your unfiled returns. Mm-hmm. That's a little bit impractical. So the IRS makes it their policy sort of out of thin air. There is no law. They just say, no, we're just going to do 6 years.
6 years.
6 years, right. But it's like, well, why?
Yeah.
Because I guess and I think the reason is they can't criminally charge you. It's basically impossible to criminally charge you after 6 years. Well, we're not talking about crimes here. We're really talking about, well, why don't you just, charge them? And then you get back to the other reason too. What's the sense of assessing someone 30 years of unfiled taxes when you know they're not going to pay the 6 years?
Right.
So
now
that's
you're
sort of
time.
right.
Yeah.
So it's sort of, they're balancing things. And if it was 30 years, people wouldn't do it. How am I going to do this? It's not practical. So they've limited to 6 years. Again, there's no law. It's in the IRM, Internal Revenue Manual. 6 years is good. Now, what happens, and then it used to be when we started that, the IRS didn't SFR a lot. They couldn't find a lot of things. And so we were always doing 6 years. Now what happens, because the IRS's technology is so much better at collecting data, we find people, they come in and they have SFRs going back 8 years. So we have to file a return for that for year 8, so we'll file all those returns to get a balance down to where it could be. So that's usually what you're going to do if you have unfiled tax returns. You want to usually if you have unfiled tax returns, that alone isn't something that will typically trigger some sort of criminal liability. Mm-hmm. Millions of people don't file their tax returns, and this is why. This is important for people. Why? The IRS doesn't have a sworn statement that you say this is the tax return to the best of my knowledge. They don't have that. If they have that, now they could say, oh, I got you because you swore that this was to the best of your knowledge. If you didn't do anything, yeah, they could get you for tax evasion. It's just a harder case. When you look at typical tax evasion cases, it's someone under-reporting their income. Mm-hmm. They really took in $1 million. They said, I only took in 500 or whatever it is, signing it. And then, there's discussions back and forth between whoever so they can get somebody else to testify in multiple years.
That makes sense.
So just unfiled returns on its own, a lot of people, a lot of people underestimate their criminal exposure when they're doing something really crazy. More common, people overestimate their criminal liability. And unfortunately, there's so many of those tax resolution places that they're using it as an agitation point to get you to hire them. The IRS is going to come and arrest you if you don't hire us. People, they say that. Talk about high pressure sales. Oh, look, the IRS has 3,000 indictments a year. And when you're looking at, their focus right now is foreign income right now. That's where the big stuff is. That's where the big dollars are. They're not really looking for someone who hasn't filed. It's just it's a lousy case.
They're short-staffed. They've got to go after the big money.
Yeah.
So if you've got unfiled tax returns and you have foreign income or assets, that's a little trickier.
Yeah, that's where that used to be you would just file amended returns in that case, but they kind of, what they have is the leverage of the FBAR penalties for your unreported bank accounts and also your 8938, and then we talked about that in our FATCA series. So they have a little bit more leverage there to assess penalties, and so you're really, and we've talked about this before, that there's the offshore voluntary disclosure program. And that is actually more of an FBAR amnesty, if you will, because you don't have really, most of our clients have no criminal liability.
Right.
10% maybe do. Most people just don't have any criminal liability. We're not getting into the offshore voluntary disclosure program because we're worried about criminal charges. What we're worried about is horrific FBAR penalties that can be 50% of account value. We're worried about 3520 penalties, which could be 25% of the gift amount. We're worried about 8938s, which is $10,000 per occurrence, keeps the statute open. So we're worried about 5471s. We're worried about 8858s. Those are the things we're worried about. Not so much, the Department of Justice. Plus there's there's millions of people. You cannot arrest everybody at all. You can, never.
Talk about a rebellion.
Right. Well, if you tried, if they had 200 years to run through all the indictments, they couldn't get through it.
Yeah.
There's not. Yeah.
All right. Now, what about IRS amnesty with filed returns?
Well, filed returns, here you go. This is where you're going to want to get one of those legal opinions here, okay? Because filed returns, right, why didn't you report this income? is your question. You know, what was it? And I've had some interesting cases here of where, you know, if it's something where, oh, you know what, I didn't realize that was the kind of income. Someone gave me a bogus statement. I'm just doing it because I looked at, you know, I did it, you know, we did an internal audit. Our numbers came out differently. Let me amend it to include that. Okay, that case, someone's saying you made a mistake, not really criminal, which is, you know, some bookkeeping errors. That's something where you're not really going to, you know, you could just amend your returns. Here's a different sort of scenario. Let's say that you were an investor in a Ponzi scheme, okay? And you were one of the first investors.
Okay.
So you're on the right end of the scheme, and your money continued to grow, and you're sort of not believing it, and it's like, oh no, you have the cash, you have it right there. You're like, okay, this is really happening, and so, but you're not putting down your income because you're not quite sure if you're really going to get it. And then this goes on for, say, you know, something like 10 years.
Oof.
And now you have, okay, at this point I have all this money. I really better do something. Okay, in that case, what we would want to do is a domestic voluntary disclosure. You know you had the money. Yeah, you had a reason why, like, what the hell is this? This is actually working? All right, okay, I have this money. I really do. And so in that case, you would want to do a voluntary disclosure. Now, years ago, we had a few of these cases going on.
Oh, wow.
Because, you know, Ponzi schemes were not invented by Bernie Madoff, but rather, what is his name? Leonardo Ponzi, or whatever his name was. They go on quite a bit. And so this was, and it was related to the same Ponzi scheme. We put people into the voluntary disclosure programs to report this income. Thank God. Because when the Ponzi scheme blew up, they were the first investors, and the FBI is looking at these guys as part of the conspiracy.
Wow.
So the fact that, and it was like, whoa, did we do the right thing?
Yep.
Because they would have definitely gone on with tax evasion on it. Because it's like they wanted to get them anyway. And the tax evasion was right simple, there. Easy. It's like, here's the money right here. Why didn't you? I mean, that's a lot of money. It's a lot of money you didn't, you know, it's like, look, we'll give you, you know, there's a grace period a little bit, but 10 years and millions of dollars is sort of hard to explain away. Now, this is the thing. They had to give some of that money back.
Really?
Yeah. Because it's like, well, you guys knew this was bullshit. And so they ended up, so the court made them give some of that, took that money away. So then what we did is, after we did the voluntary disclosure with amended returns, we amended our amended returns to show, well, this is what they were ended up with.
Oh, okay.
So luckily they didn't pay a tax bill for stuff they didn't get.
Yep.
So that was sort of, that was going through a very long process, but luckily, I mean, there's the important thing right there. Look, the money you're paying really didn't matter. It was really the criminal charges was the important thing, because it's like, okay, you're in good shape here. You're not going to have to worry about them getting upset with you.
Yep.
Here it is. You went through the right thing. You went through the voluntary disclosure. You didn't go through the amended return process, which would have been better than nothing. In this case, for the domestic. Now, where it's not better, where people are better off kind of doing nothing, is in the offshore component, where they're looking at the offshore voluntary disclosure program. They're looking at 27.5% penalties or 50% penalties. Yep. People are saying, well, if I do that, that's way too much. I'll just file amended returns and cross my fingers, hope for the best. And that might happen. Certainly the IRS can't get everybody. That's absolutely true. But what we've seen happen is, with these so-called soft disclosures people are doing, it's really not a program. Someone just invented the name. And there's somebody who invented the name qualified soft disclosure. That's just somebody being creative with the language. There is no such thing. Plus, it's not soft, or it's not quiet, because the IRS knows you filed this amended return, and they're like, yeah, we see you had reported additional foreign income. Yeah, our database is allowed us, you know, it does tell us that.
Yeah.
So unless you're going to lie on your return with your soft disclosure, the IRS will full know, well, so why lie on your return? That doesn't help you out. So that's one place where that place is just filing amended returns really won't help you, because now they want to punish you because it's just their policy. Because they say, we set up this program to get all this money, and you have careers at stake, and people don't want to see them bypassed. So you really can't.
They need a good press release.
Oh, yeah.
All right. Now, what about changes for 2016? We've got the PATH Act.
Right. That's where we're seeing all our changes. Okay. When it comes to the IRS Fresh Start program, okay, which is just a set of guidelines, no changes there. So we have a pretty good series on that we produced in 2015. So that still stands.
Yep.
Okay. What we're seeing for changes, okay, and these are some of the big changes. The IRS is now authorized to send cases out to third-party collection agencies.
Ooh.
Yeah.
Ooh.
Just a fantastically dumb idea. They keep on doing this, and it's stupid. It doesn't work. It's going to fail, just like it failed 6 years ago.
Mm-hmm.
It's like, wow, you guys really don't have a long memory.
No.
It failed before. And I'm not blaming the IRS. The IRS didn't say this. They didn't ask for this. They know it's a bad idea. They know it's stupid because the amount of training it takes to get a third-party collection agency who doesn't have to follow, there's no collection due process hearing when you owe money to, a video rental, Hollywood rental video. By the way, did I ever tell you that?
Yes,
I did tell you that. Jeez. That was a terrible, and I never remembered the name of the movie, the horrible movie.
That you.
So they don't have to. Typically, they're just not trained to go through all the protections that the IRS does, and so they're not. They're not able to do anything. They just sort of sit there and they don't collect any money, and then the IRS says, "Oh, you guys didn't collect any money, yeah, but we're going to charge you all this." So it ends up being a wash, and nothing gets resolved.
Right. And then the IRS scams are more rampant.
Right. That's the other part of it. This is why it's so stupid, because it's like, well, you know that the IRS people calling, posing to be as the IRS. And the IRS is like, the IRS never calls you. It's a scam. It's a scam. It's a scam. Third-party collection agencies call you. Because I've had them call me before when they were doing this stupid thing before. And I was like, wait a second, where are you calling from? I'm like, wait, this might be a legitimate call. And I said, okay, who are you calling on? I'm calling on so-and-so. Can I? And she asked me, can I verify her, Social Security number? I'm like, can I verify the Social Security number? I know what it is. Do you know what it is?
Yep.
And then it was a legitimate, collection agency, but it was like a waste. We're like, well, we're finding an offer in compromise. It's not going to you anyway. Don't worry about it. There's nothing you're going to do. You're wasting your time.
So you're really opening the public up to more of these scams.
Yeah, right. It's just like, well, now you're saying that, it's always a scam unless it's not.
And then the other big change for 2016 that's really big is the passport revocation, where they can take your passport if you owe $50,000 or more in taxes.
Right. Now, none of these, neither the third-party collection or passport revocation have been implemented yet.
Not yet.
They have the whole processes to go through, so it's going to be interesting what we're going to be left with for final rules. We're hoping that as long as you're in any collection alternative, your passport won't be revoked. But as the law is written, it's not quite like that, but the IRS is granted wide authority to write their own rules. I mean, if they write their own rules to say, hey, look, any collection alternative, we're not going to bother you. That is kind of what I'm expecting, just because it's easier for them. Otherwise, they're going to have to deal. I think, the IRS management is looking at this as like, this is going to be terrible for us. If we start revoking people's passports and they're in a collection alternative, and we're going to deal with calls, people crying, our staff is going to be attacked. Like they're like, this is a really crappy job that we have to do here. We're not letting so-and-so visit their dying mother in Poland, or we have to get an exception for it. So I think they're going to say this isn't going to, I'm hoping this is where it goes to like, look, any collection alternative, if you're currently non-collectible, you get an offer in compromise, partial payment installment agreement, anything like that, your passport is safe. That's what we're hoping happens, and it really should happen. I mean, I wish the law wasn't passed at all, because come on, mistakes are going to happen. And I mean, the IRS misassesses things, and they send notices to the wrong place. And if people are overseas, where does this notice go? They didn't even know they were audited. And now there's this outstanding bill. Then they're going in and, they're trying to get it back. Oh, yeah, your passport's been revoked. Why? They have no idea why. And they actually didn't do anything wrong. Somebody screwed up. So I wish it wasn't even the law.
All right. So even though technically there's no federal tax amnesty, there is hope.
There is hope. And one of the things that the last change for 2016 is the IRS budget has been somewhat restored. So the hold times have decreased. They are starting to get some more of the staff. We haven't been seeing the staff hiring with local revenue officers, but it seems like I think they're going to be able to staff up a little bit.
Good.
So you might want to solve a tax problem before there's a knock on your door. There is a little big gap. And again, we're still seeing the IRS being pretty generous on the offers and compromises that are submitted correctly. It's a pretty good time still.
Take advantage of it.
So yeah, it's
never
pretty
know
good.
how long it's going to
And I mean,
last.
right, and the economy kind of sucks, and it's been sucking for 10 years. So there's still that, there's that realization.
Yep.
And the last thing you want to do is sort of settle your debt when things are good for you. That,
sense.
and I know it's hard to believe, but there used to be boom times, and I think I saw this statistic. This is the only 10-year period where the GDP growth has been less than 3% each year.
Wow.
So many people forget that booms exist. They do. They happen.
Yeah.
And when the booms happen, wow, it's something else. Well, do you really want to make a deal when the boom is happening? Because then the IRS is like, oh, cool, you can pay us everything. Oh, my God, this is great.
Yay for us. All right. Well, thanks for watching. I would say subscribe to our channel because we do update a lot, and we'll have updates on the passport law, additional amnesty programs, and other awesome tax information. Thanks for watching. IRSMedic, the law offices of Parent & Parent, LLP. Real tax attorneys for tough tax problems.